Hi traders, the date today is 3rd of March 2023. So in this video, I'll be talking about today's price action. So let's get started traders. Before today, I would like to start with just a little bit of from yesterday's price action. So traders, yesterday what happened was that market opened around this level here, and from there there was sellings in the market. No major buying seen yesterday, and in the first half they were selling, market consolidated, and then again there was sellings in the market, and the market closed at around its low. So if I take you to the daily chart, so this is yesterday's daily candle. So very nice strong red candle with closing near its lows. So seeing yesterday's price action, and and seeing the price action from last 8 to 10 days, it seems that the majority of the money was on the put side. So so majority of the traders, they would have either sold futures, they would have brought puts, they would have sold calls. And today traders, what happened? So this gap of opening, nobody was expecting this, but this is how the market exactly functions traders. So market functions, market runs because of liquidity. Wherever there is liquidity, market goes to take that. And today what is happening, we are seeing a big short covering rally on the upside. So traders, what would have happened is that all those people who were on the bearish side, seeing this big gap up, they panicked and they started exiting their positions. So traders who would have brought puts, they would have to forced to sell puts. So traders who would have sold calls, they would have been forced to buy calls when they're exiting the positions. Somebody who has sold futures, he is exiting his position. That means he is buying the future lot. So traders are panicking, they are closing the trades, and the market is rallying up. Because uh, trade is being trade is being converted from the selling side to the buying side because they're exiting their positions. And traders, whenever these kind of setups happen, so whenever their market has trapped, and as price action traders, we just have to wait for a confirmation. Like traders, I always advise to have the highs and lows of previous 3 days at least marked on the chart. They normally act as very strong support and resistance zone. Like yesterday, this was my level, and it was the high of yesterday. So we can see the first 5 minute closing was a very strong green closing, breaking above this resistance. So once this resistance level is breached, it will act as a support. So it is the theory of price action. So it would a very nice entry would have been here at this level as soon as this candle closed first 5 minutes and the second candle started to form. It would have been a very nice entry, and the stop loss should ideally be around the low of the candle. So whenever these kind of setups come, or the happening of a trending move is very much likely because the market has trapped, and whenever the market traps, and traders like this, it doesn't, it shows no signs of stopping. It shows no signs of relief. The market goes on that direction continuously, and one should, try to not book their profits, try to slowly trail their profits in these kind of setups. So traders, in this daily chart, we can see that a major short covering rally is happening in the market. The market, all those people who would have shorted here, they are booking their positions. All the big players book their positions overnight, and they are booking their positions, and all those people who would have, if even if they have not booked their positions, seeing this short covering happen, they are slowly exiting, and the slow market is going up. So this is how a short covering rally looks like. So much red candles, and see one candle is taking all over them. So now we have to watch how high this short covering rally comes. So ideally, if you draw a Fibonacci retracement from this high to this low, so ideally it should be somewhere around this 50.5% and should not breach this level here, 0.618%. But let's see traders what happens. So traders, if you see the price action here, after showing this red daily red candles from 7 8 days, with a small gap up on 1st of March, there was buying seen in the market, and seeing this buying and it also closed around its high. Seeing this green daily candle, most of the traders would have been on the call side, on the upside. They would have been on the bullish side, thinking that a short covering rally will happen now and the market will maybe open its gap up and go up. But after this 1st March, on 2nd March, what happened? There was selling seen in the market. So market went down to hit all the stop losses of the longs. So all those people who were on the long side, market hit, you know to take out all their stop losses. And and you know and seeing yesterday's price action, even those who were on the long side, though their theory is correct, though their price action is correct, that the market doesn't move in a straight line. Market moves zigzag line. Like market has gone up, and it there is a very high chances that the market will retrace, and market will go up, and then again it may decide to come down. So even traders who have knowledge of this theory, they would have been forced to exit the trade. The stop losses would have made, and he would be hit. And seeing this red candle on 2nd of March, even they would have had been struck with FOMO, fear of missing out, and thinking that my stop loss had been hit, and market can go further down. So even their longs might have been converted on the selling side. And today what happened, traders? So market trapped all of them. So with market opened with a gap up and is continuing its rally up. So traders, this is how the market moves. This is how the market works. It had to give a short covering rally. It had to go up, but what it did first was that it took out the weak hands. It took out the traders who were on the uh, bull on the upside. It took them out first, and then again it trapped, and it then again went up. So it's a game of trapping, traders. So market trading is all about trapping, because the only food for the market is liquidity. So wherever there is liquidity, market will go on that side. So you know the the news like economics and all, fundamentals, they affect the market. Seeing that the market decides its long term view, like the whether it has to be a bull market in the long run, it has to be a bear market. But short term trends, short term price action, all it's all a game of liquidity. So that is how the market moves. So traders are talking about today's price action. Even those traders who would have missed this opportunity, there were many opportunities later. Like after this up move, there was some consolidation here, and then there was a breakout retest, and then again a breakout. So an entry would have been here after seeing this breakout, or after this retest, and then again the breakout entry was here. So in these kind of setups, one should not be afraid to go long. You know so only some selling seen in the market was this point. So it is a very strong market now, traders. The short covering rally is insane. What's happening here right now? So yesterday the market was at 17,318, and now it's at 17,626. So this is what it is, traders. This is the market. So yeah, traders, I'm closing the video for now. So see you soon, traders.